to trade in a bear market, right, you have to think in three-dimensionally, right, which is difficult, right? Most of us did not take, you know, calculus 3, right? But you have to think about time, you have to think about direction, and you have to think about magnitude, right? It's the vector that gives a point in 3 dimensions, right? A lot of people just cannot, you know, only 2 dimensions or 1 dimension. But to be a trader, as an investor, you don't really care about time, right? You buy Tesla and you have long-term vision. You basically saying, I don't care short-term Tesla going higher, long-term Tesla going higher, and because I only think in 2 dimensions, right? But to be an active trader, you have to develop this 3-dimensional view, because each data point is defined by direction, the magnitude of the move, and the timing, right? So the model, which is very difficult concept for a lot of new traders, and I appreciate that. But 6 months forecast can be negative, and 10-day forecast could be positive, right? And a lot of, you know, this is probably the most common questions everybody asks. Vlad, something wrong with the model. What do you mean? You know, QQQ is, you know, who's right? Is this the, you know, is the 10-day forecast right, that it's positive, or is it 6 months forecast, right? Or, you know, sometimes with seasonal chart, it will say one or the other because different time frames. So that's the answer. The answer is that, you know, you have to zoom out. If I look for the past 6 months, you don't have to be an experienced trader to see that spiders is in downtrend, right? No matter how you slice it, no matter how you dice it, you know, you don't, you know, the trend is down, right? And it's not changing, you know, there's no evidence that it's changing, right? But if you look short term, if you just concentrate on, you know, since middle of June, well, it's obviously positive, right? So visually or through the models, that is a very important concept, that you have to think about, you know, how much more can the stock market move, right? In what direction? In what direction the stocks move, and, you know, how much more time will the stock move higher, right? So this is extremely complicated concept, but, you know, certain things come to you naturally, certain things you have to work on, and it comes with time, it comes with practice. But you always have to ask yourself, you know, how much more time, how much longer can this rally last? You know, what is the maximum measured move? You know, is it 10%, 15%, this bear rally, 20%? And, you know, what direction is the next move? Are we heading higher next move, or are we heading lower? The good news is that we do have models to help you make that decision without, you know, having too much experience. 10-day, clearly QQQ is an uptrend. 6 months, clearly QQQ is in downtrend. It takes, you know, 2 to 3 candlesticks to change the direction of the market. Right? If you want to, on the long term, if you're looking at the monthly chart and market is in downtrend, you need at least 2-3 months of posting higher highs and higher lows for the trend to reverse. If you're looking at the 10 days, you need at least 2 to 3 days for the trend to change, right? If you look at the 1 hour chart, it'll take 2 to 3 hours for the trend to reverse, right? So something to keep in mind when you look at the candlesticks, you know, again, time, you have to figure out how long is the candlestick, what's the concept of time, not an innate thought process, something you need to learn. And, you know, it'll take 2 to 3 candlesticks to reverse the trend. Again, 2.5% of account value, no more than 4 positions. Right now, unless you're an aggressive day trader, I propose, you know, your stop loss without the, so you don't take too much risk. This is your stop loss. It's the recent low, 362. We're probably not going to reach it, you know, Monday, but, you know, by next Friday, it is conceivable that if CPI and PPI is worse than expected, we are back to 360 or below. So I would propose to use your stop loss as 360. So let's say you are, you know, you have a reversal, you think this rally is going to continue. Okay, you buy at 390, right? Because you think we're going to get to 420, right? You know, if we break this level, then the next overhead resistance is this, right? This is R2, R1. Let's say by the end of the day, all of a sudden this rally continues. Like yesterday, we're up 1%. Okay, you're saying, okay, I believe that we can reach 420 level. It is possible. Okay, you buy, but then how many shares can you buy? This is where the calculation come in. You buy at 390, you exit at 360, that's 30 points to the downside. Maybe you want to wait till it reach 420 plus 30 points to the upside. You're risking 30 points, right? 30 points on a $250 risk, right? For 2.5% of $10,000 is $250. I propose if you have $10,000, do not risk more than $250 per trade. Okay, so 30 points, if you buy it at 390, it's eight shares. So you can invest 8 shares. Based on your personality, you can either, if you're very aggressive, you just buy all 8 shares here. If you're more conservative like I am, you would buy 4 shares here. And you know, if CPI, as a result of CPI, we drop to 370, and you think this level will hold, you buy 4 more shares. Because then at 360, you're not going to be down more than 2.5%. And that's the thought process. Whether you're buying options or stock, these are your exit levels. If you buy Rivian, if you're buying oil, if you're buying whatever you want to buy short term, these are your exit points. I would encourage you to look at QQQ and spiders to decide, because I don't think if spider is going to drop to 360, you know, oil is going to retest new highs, right? That correlation is broken. So, you know, whether you buy technology, banks, or consumer staples, look at the spiders, look at QQQ. If this level is broken or this level is broken, then everything follows. But this calculation is the most important. If you can get down in the simple rule of 4 positions, 2.5% of account value, then you know everything else will follow.